everyone, welcome to Foxon Media Digital. My name's Amy and today I'm joined by Cindy Rose, who's Head of Responsible Capitalism at Liontrust Asset Management. So welcome, Cindy. It's great to have you on the channel.
Thanks very much, Amy. Good to be here.
Yeah, of course, it's nice to see you again because you were at TSAM ESG back in November. So we wanted to catch up with you and just find out a little bit more about you and your role at Liontrust. So just to get started, could you tell us a little bit about yourself, your career, and what you do as Head of Responsible Capitalism?
Sure. So I'm Cindy Rose, and I've been at Liontrust since April of 2022, so about 9 months, 9 or 10 months now. And before that, I had about 2.5 years at Majetti Asset Management, and Majetti was a small, it was an asset manager mainly focused on the institutional market, and it was acquired by Liontrust last April. So that's why I'm at Liontrust now. And before that, I had about 20 years with Aberdeen Standard and Aberdeen Asset Management and all of its guises. And along the way, I have basically been head of ESG. Or co-head of ESG, and I have spent my career basically growing up with the ESG institution, and it's been a fascinating journey, to be honest. Because when I started, it was SRI, socially responsible investing, and the focus was very much on screening and on meeting client demand for screens and making sure that people's needs were met in terms of what they did and did not want to invest in. And I've done loads of engagement with companies around the world, worked with our teams around the world, and not just on the equity side, but also helped fixed income teams learn or work out ways to integrate ESG that's meaningful to their investment process. Worked in the alternative space. So it's just been a huge expansion of this area, and I think it's just been an amazing time to be a part of ESG. So at Liontrust, I'm very pleased to say that we have what I would consider to be a fairly sophisticated approach to ESG. We have about a third of our assets under management managed by the sustainable investing team, and they, of course, do very traditional types of screening and thinking about themes in the ESG space, and also using a sustainability matrix, which is part of their investment process, which is a fantastic approach. And then Liontrust also has about 2/3 of its assets under management, which are in mainstream funds. And so basically, the group, Liontrust, has a fairly robust reputation in sustainability. And all we wanted to do was be able to evidence that we are still looking across the ESG space and using those considerations when undertaking investment decisions across all of our investments for clients. So I'm really pleased to be here. I think it's a great opportunity. And it's really lovely to be in a place where responsible capitalism is taken so seriously. And it's part of the group's strategy going forward.
Great, thank you for that introduction. It's nice to see, as you say, that you've seen the evolution of ESG, throughout the industry and notice how the different terminologies change in the sector. So just to expand on that a little bit more then, how do you differentiate your sustainability funds from your mainstream ones? What are the kind of big decisive factors for you, and what does responsible capitalism for you mean and your teams? Because I know you put that first at Liontrust.
It's a good question. So basically, if we think about the roughly 1/3 of the AUM that's managed by the sustainable investing team, then that team has a very specific investment process, and it has the objective of making sustainable investments and getting a capital return for clients. So the process involves some screens. It also involves looking at sustainability type themes. And as we said before, it involves looking at, they use a sustainability matrix. And those are parts of how they determine whether or not they want to hold a company or a bond. For the rest of our holdings, we have 7 other investment teams, and they all have their own investment process. Many of those teams have already embedded some element of ESG integration. It could be a risk score, an ESG risk score, or it could be other things that they look at. But so the difference then is that for a mainstream fund, it doesn't have, that quote sustainability type objective. It is very much about making a capital return, but you can also embed ESG considerations. You can also integrate ESG considerations into an investment decision-making process for those funds. And that's what I think is so unique about Liontrust. So when I was at Majetti, we worked on a way that the investment team there could formally integrate ESG considerations without having to call a fund an ESG fund or a sustainability fund. And Liontrust, when they acquired Majetti, they liked that approach very much. And so this year we are in the process of trying to offer information to the teams and offer the kind of support to the teams that would allow them to either enhance what they already do or just to have extra additional information. And so those come in the form of what we call a materiality assessment, which is very much a holistic approach to looking bottom up at a holding, at an asset, and saying we can identify and then prioritize the key exposures that a company or a bond issuer might have. Some of those will be E or S or G related, and some will be operational or financial or related to other things. But at the end of the day, you get a very distinct picture, a much more accurate picture, I think, of how likely and how impactful a certain exposure could be to a company. And we look over the investable time horizon of a fund. So it could be like 1 to 3 years or 3 to 5 years or 5 plus. And I think that's a really robust way of approaching this. And so responsible capitalism as the banner, which houses all of our sustainable funds and all of our mainstream funds, and also the approach that the group has to ESG and to exposures, is that responsible capitalism for us is about focusing on what matters most. And you might say, well, that sounds kind of confusing because who's going to decide? But it's really actually a very straightforward approach because it's the investment teams that decide what matters most along with their clients. And also, they're all focused on the going concern of the investment. Otherwise, there's no point in making the investment. So we're looking at the exposures for many of the assets that we hold for clients. And then from the PLC side, it's very much about thinking about where our exposures are. And we have many exposures that are similar to some of our holdings. Like attracting and retaining talent and our financed carbon emissions and cybersecurity and changing regulations. All of that carries risk and opportunity. So how can we manage those areas better? And so that fits very much within the Liontrust framework of focusing on what matters most. From the PLC side, we also have input from an employee survey, and we have input from our shareholders and also from a wider stakeholder. So we put all that together, and we are able then to come up with the things that we need to spend our time on and focus our attention on. And it's I'll tell you, it's a great platform to have.
No, that makes so much sense. It sounds like a great model, a great way of working, and a really good bigger picture thinking strategy there. So just to go back to the materiality assessments then, is that something that you've developed in-house, or have you got frameworks that are kind of industry standard that you've based this on?
Yeah, thanks for asking. We developed it in-house. And I think along the way, I have learned the lesson of how important it is not only to be able to talk with clients about what they're holding, but really to be able to talk with mainstream the fund managers and say, we need to be able to communicate. I know you already do some of this. Have we caught that information somewhere? So a part of it is about data collection. Part of it is about making sure that we're thinking holistically. We're not just ticking the box on things and that we're not skipping anything that could really be material. And this takes challenge on an investment team. Yeah, so it's really helpful. We have a central team like many fund managers do. Ours is called the Responsible Capitalism team. But what we're working on is really expanding that kind of exposure to each of our 8 different investment teams and really understanding where they're coming from and capturing the data and really being able to then report. And as we talked about earlier, evidence what we do. We make a number of statements in the public domain about, what we are as a business and what we do. We just want to be able to back that up with a statement. And so I think that that's a really great opportunity. And, I think fund managers are kind of all in the same boat about that. So people do that in different ways. And my job is just to make sure that we have the most robust, most transparent, and really forward-thinking way to go about it.
Yeah, so thinking ahead then, I know that at the moment ESG still has some of its hurdles and it's still kind of seen as its own category. But as this becomes the norm then, do you think that responsible capitalism will just be integrated across all of your funds and it will kind of lose its own autonomy as a classification? Because obviously if you're already integrating ESG into the other funds, as a lot of firms adopt this, do you think that there will be less dedicated ESG teams and it will just be across all investment professions?
I think that, we should come to the other end of the pendulum swing where, you know, ESG was nothing and now it's going to be everything. And what we're going to do is then swing back to something that's in the middle. But hopefully, as we swing back to something that's in the middle, we can pick up the things that the market really wants to focus on. And one of those very well may be carbon. I think it has to be carbon emissions. And the way that we would like to deal with that then is talk about the exposure that each company or each bond or each asset has and what specific exposure it has. Because I think, just having everyone cut their carbon emissions, well, that's really good. It's not a very practical thing. I think what we need to do is, and this is probably what I like most, is about that kind of bottom up stock selection, working with the companies and going to them and saying, look, we can see what's going on with you, and we would really like to encourage you to do the following. And it's very tailored request to each company. I'm not saying that having kind of a mass mailing to companies can't be a starting point. I think it can be, but then it's really the relationship. We have a vested interest in you, whatever company it is, and we'd really like to see you be a better investment. At the same time, you can help with the global issue. But I think that's where you gain confidence with companies. I think if they see that you've done your homework and you understand what their materiality map looks like holistically, with the finance and the operational and the E and the S and the G all put together, I think you kickstart the conversation, to be honest.
Yeah, I think that will be the ideal situation, is taking every financial product and making it on a case by case basis. As you say, thinking about what the firm wants, thinking about what kind of exposure risk you want, and treating, environmental, social, and governance as a big part of that, rather than it just staying as responsible capitalism as a niche for forever.
Absolutely.
Hopefully we get there. But like you say, I think it's just, integrating it more into the value chain and into the investment process. So we'll have to just watch the space and see how it evolves over the next few years, I guess. And on the regulatory front as well, do you think that the regulators are helping with that journey, or do you think that by making it more of a box ticking exercise, it has a fear of segregating it and keeping it as its own thing?
It's a good question. I have a lot of sympathy with what the regulators are trying to do. I think, part of it is that the market and investment management have maybe created a problem in and of itself by maybe not being specific enough about what we've been doing, or not being able to evidence what we do. And so I understand the need for regulation to kind of come in, and if we put the investor at the heart of our everything we do. If the investor is our focus, our primary focus, then we want the investor to understand what it is they're investing in, right? And that's what we do at Liontrust. I think everybody tries to focus on that. I know Liontrust makes that their focus and our focus. And so I think the regulation, insofar as it allows investors to understand exactly what it is they're investing in, I think that's a really good thing. Where it becomes, something of an evolutionary thing is where the legislation either isn't clear, or where the market needs to decide some things. And I think that that's just something that everyone has to work through. So I mean, it's like anything else. We have to start somewhere and then see what works and what doesn't. So the FCA has put in a lot of time and energy into looking to think about what it wants to do in terms of a labeling system. That paper is still in consultation, and I think it is intended absolutely to help the end user, help the investor make more informed investment decisions. Whether or not there's box ticking involved remains to be seen. And that may not be such a bad thing. It's just that we all need to adhere to the same rules and have a clear understanding of what it is the rules say.
Yeah, and I think once the gaps in the data are kind of addressed more long term as well, to create that bigger picture as to whether funds that are mainstream funds or sustainably focused ones have the correct data to actually measure it, that's when the regulations will kind of, the good thing is they're always being updated, aren't they? So it's not like
Yeah,
one rule
exactly.
will last forever. So yeah, closing thoughts, Cindy. What are your hopes for the next 12 months? What are you focusing on?
Well, here at Liontrust, we're focusing on rolling out our additional information to the fund management teams. We're working really hard with that, and that's going to serve the purpose of providing additional information, basically being able to house all this information that we have in a central location, and also for the benefit of the investment teams, which means we can report better, and then being able to evidence what we're doing. Yeah, so that's for me, that those are really important things for Liontrust over the next 12 months. One of the larger themes, I think, is about just the ESG education, yeah, and sustainability education. And I would love to see the market understand and appreciate, and it is already starting to do this, the idea about nuance and about being able to work with companies, not befriending them, but having kind of a vested interest in them and really wanting to work with them. And I think a lot of investors do that. But I think the more widespread that can become, we're all in this together in terms of the carbon crisis, in terms of humanitarian issues, and the world is becoming a little bit more tribal. Yeah, I think most people would agree with that. I think this is a great opportunity for us to get back together.
Yeah, and we've got ESG London coming up in November once again. So hopefully by then, we'll kind of be able to touch base and see where we are in terms of education and where you're at with your projects at Liontrust as well. But for now, it's been so lovely having you on the channel. So thanks so much for taking the time.
Thank you so much. Lovely to be here. Thank you.
And thanks everyone for watching. Don't forget to follow our YouTube channel for more content on challenges and opportunities in asset management, wealth management, and ESG. And don't forget to give this interview a thumbs up and hit the subscribe button.